Hello everybody, I'm Gayan. Welcome to our video. Today, Raman and I will explain the relationship between Basel III and SME lending. So today's video is inspired from this journal article, which you can find in the video Collaborate. So what's the journal article is about? The journal article is mainly to find out whether SME are easier or more difficult to lend from banks after Basel III is implemented. First of all, some of you may be wondering, what is Basel III? Basel III is a set of standard rules that the Australian bank must follow, and the APRA set this standard to make banks never fail, which means recession, the bank is still there. COVID-19, still there. Even 100 years you are not there, the bank is still there. That's the APRA goal. And APRA do this because APRA wants consumers to have confidence in the Australian banking system and use them confidently.
Thanks, Kayin. My name is Raman, and I'll be explaining about SME lending and its indirect effects. The indirect effects and the role of expectation could co-determine how Basel III implementation ultimately affects SME financing. The indirect effects could work through the response of buyers and suppliers of SMEs as well as the collateral markets to Basel III. Expecting Basel III implementation in their country, SMEs may change their perception about future credit availability and preemptively adjust their borrowing strategy. Banks may also need to strengthen their capitalization and adjust their balance sheets to improve their short-term liquidity and secure stable funding. Reducing credit to SMEs and one of the riskier lending categories, asset classes, could represent one adjustment mechanism through which a bank can improve its capitalization in response to stricter capital regulation. The strength with which the Basel III implementation affects SMEs financing may depend on the degree of financial inclusion of the SMEs. For example, whether the firm have a bank account, bank loan, or both. And also to take into account is firm risk characteristics and size, age, and also financial performance. This figure here depicts the main channels through which Basel III implementation could affect SME financing. The several main channels that we assume could work with various intensity, we suppose that the main channel through which Basel III implementation affects SMEs access to financing is the availability of bank credit. In principle, the Basel III package focuses on increasing the quality and quantity of capital and liquidity at the bank. However, what we found from the accaglobal.com, the focus of Basel III and indeed of all capital regulations so far is not primarily a bank's balance sheet but the sum of its risk-weighted assets. Capital adequacy rules assign a risk weighting to each of a bank's asset that is meant to be proportionate to the credit and market risk that the asset in question represent. Under Basel III, loans to SMEs are assigned a relatively high risk weighting inherited from Basel II, which should, when combined with rising capital requirements and turbulent capital markets, result in disproportionately high cost of capital for banks when lending to such businesses and a gradual shift of their entire business models away from SME lending. Once banks expect that Basel III can be implemented in their country, the bank lending practices may be tightened or altered. Because of this expectation channel and possibly systematic factors that determine Basel III implementation across countries, possible endogeneity and sample selection issue need to be addressed when estimating the effect of Basel III implementation on SME financing in a reduced form framework.
In short, Basel III do have a negative impact on SME lending in emerging markets and developing economies. And how negatively impacted the SME depends on the financial inclusion of the SME. For example, a SME that is already using bank credit will be easier to lend from a bank than a SME that do not even have a bank account. Another thing is that a SME that has a good relationship with the bank will have an easier access to lending. Moving on, Basel III requires SMEs to put up more collateral on banks' loan. But SME that is in country with better contract enforcement may do not have to meet this requirement for banks' loan. Lastly, this paper also found that the size of the firm and capitalization of the bank do not affect SME access to finance. Finally, the paper has some suggestions for the problems, which is well-capitalized and provisioned banking system can improve SME access to finance and cushion any short-term negative impact on SME financing. Next, the paper also suggests the government to apply effective monetary policy to ensure a stable market, so banks can continue providing credit and financially including SME. Ultimately, improving contract enforcement can make the banks to feel safe to lend to SME. Alright, that's all for our video. If you like our video, please click the like button. Thanks for watching.